What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful in the YouTube comment section of my videos and on Instagram. Scammers sliding into your DMs, asking you for money to invest for you to make you rich. All of it is a scam, guys, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that account. They're going to give you up to 12 free stocks for just trying out their brokerage app. Those 12 free stocks could be worth up to $30,600. There's a link down in the description box of this video. Click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. In today's video, guys, I want to talk a little bit about why the stock market last week started to sell off. Jerome Powell, which is the Fed chairman, made some comments last Friday to the effect that core inflation is being sticky and not coming down as fast as we would like it to come down. So yes, our intention is to keep increasing short-term interest rates until core inflation comes down. The market did not like that. And that's why the stock market sold off the way it did. The S&P 500, which is a measuring stick of the greater stock market, is still at over 4,300 points. Let me just walk you through how good that is compared to where we were in January of 2023, when the S&P 500 index was around 3,960 points. Fast forward to June 23rd, 2023, it's 4,800 points. So it still has done quite well year to date. Talking about a 15% rate of return year to date for the S&P 500 index. So that means the stock market has done well these last 6 months. But it doesn't mean over the next several months it will continue to go up. You have the type of investors who bet on the stock market. Let's just use the S&P 500 index going up. So they bet on the stock market rising in value. Then you have investors out there who bet against the stock market. They bet that the stock market will go down in value. So constantly, when we have this turmoil between these two types of investors, the stock market will be volatile, right? And that's what I think you're seeing now. Over the last 90 days, the investors who believe and invest that the stock market is going to go up have been winning. And the first 90 days of the year, in my opinion, the investors who bet against the stock market, which for it to go down, sort of had the edge. So now what may happen is these investors who bet against the stock market going up it may shift to them now. So they may have a couple of months, 90 days of where the stock market doesn't increase, AKA, in my opinion, the S&P 500 index, because in my opinion, that represents the broader stock market. So as investors, retail investors like us, and when I talk about these two types of investors, I'm really talking about institutional investors, hedge funds, these billionaire retail investors. These folks are shifting the stock market from time to time because they have so much money that they're investing. It has no other choice but to shift. And especially when the Fed chair comes out and says, hey, the economy is still overheated and we're going to keep increasing short-term interest rates until it cools off. You got to remember, interest rates going up does not help the stock market. In actuality, it hurts the stock market, right? Because the stock market is made up of companies. And when companies can't borrow money cheaply, interest rates get too high and they cannot borrow money, they cannot invest in growth, most of these companies, right? Every company that's in the S&P 500 index is not as profitable as Apple, right? Most of these companies are big blue chip companies, but they use debt to their advantage in order to invest in growth. But when it becomes too expensive to borrow money or to take out debt, they don't do that. So they typically won't grow as fast, right? So you have to understand that premise. When interest rates go up sharply, stock market typically goes down because those companies can't borrow money cheaply anymore. So therefore, it limits their potential to grow and to be more profitable. So as retail investors who are trying to build wealth like you and I, just ordinary, regular folk, we got to know these things or at least have an idea of what's going on. And in my opinion right now, the S&P 500 is still, in my opinion, severely discounted. If you go back to December, end of December 2021, it was 4,700 points. Today, even with the rally we've had this year, totally coming from 39.60 all the way up to 43.60, that's a good rally. It's still short of where it was in December, end of December 2021, when it was in that 4,700 point range. So I believe, this is just my thought process, at some point in 2024, maybe 2025, the S&P 500 gets to 5,000 points. I think that's the trajectory it's on once we get core inflation down to a point where the Federal Reserve is comfortable with not increasing short-term interest rates anymore. And then we start decreasing interest rates, which in my opinion, accelerates the growth of the stock market. Why? Because when interest rates starts coming down and it's very cheap to borrow money, now companies can go out and borrow this money at 2%, 3%. They take that money that they borrow at 2 or 3%, they invest it in growth. And let's say they get an 8% return on that 3% money that they borrow. Net, they're ahead 5%. So that represents growth. And that's where the stock market really thrives. When interest rates come down, you can freely borrow money, you can invest in R&D, you can invest in growth, you can invest in hiring people. And then I think that's when the stock market takes off and we begin a consistent bull run. I think we've had a little bit of a bull run this year, but it's certainly not the big one. The big one is coming because I can see where the S&P 500 is north of 5,000 points sometime in 2024, 2025. And again, guys, I'm not your financial advisor. I'm no expert. I'm giving you my opinion, right? I'm just giving you my opinion. My recommendation always is to go out on your own, do your own research, and come up with a conclusion that you believe in. This is what I believe in. So since I believe in the S&P 500 index going to 5,000 over the next year to 2 years, my goal is to continue dollar cost averaging in while everything's still on sale. So all of these assets that I buy, these paper assets that I buy right now, guys, they're going to be winners, in my opinion, when the new consistent bull run starts. Right now, we've had a little mini one, but it ain't the real one. The real one's coming. But all these assets I'm buying discounted right now, especially the S&P 500 index through investing in ETFs that track the S&P 500 index like Vanguard, S&P 500, ETF VOO. The more of VOO I can buy, you got the top 500 companies in America in that fund, guys, across every industry, every sector. For most of us, 99% of us, that's all we need to buy, right? We don't have to be the expert because Vanguard has already vetted it. They will continue to vet it. And when you go look at Vanguard's S&P 500 ETF VOO, its year-to-date return, look how closely it matches up with the S&P 500 index year-to-date return. Very closely, right? It matches up almost identically. And that's what you want to see when you're investing in an ETF that tracks the S&P 500 index. Whatever that ETF is, I would look at its year-to-date return. And then I would go look at the S&P 500 index year-to-date return. And if they're not closely aligned, something's going on over here with this ETF, because it should be tracking exactly what the S&P 500 index does if it has the same 500 companies in it. So that's what I'm going to continue to do. And I'm going to sprinkle in a tech ETF, which I've talked about before, which is Vanguard Information Technology, VGT, because I believe this AI boom is still ongoing. It's at its early stages. It's going to continue to grow over the course of the next, I believe, 3 years. It's going to grow by $300 billion. That's what a lot of the analysts are saying and the people who are experts in this field are saying. And I believe that. So I'm going to always be looking forward to putting money into a tech ETF. The one I like is Vanguard Information Technology, VGT. So those are my two ETFs that I'm heavily going to be putting money in from now. And I've already been doing this since probably 2021, mid 2021, but I'm going to keep doing it up until I see the S&P 500 hit at least 5,000 points, which I think it will over the next year to 2 years. And again, guys, that's just my prediction. I'm no expert, just a normal guy out here trying to build wealth, trying to put my money in something that can multiply it as fast as I can multiply it. And I believe right now the stock market is the place to be. So drop me some comments down in the comment box and let me know what you think about the S&P 500 index hitting 5,000 points in 2024 or 2025. Do you believe that's possible? Drop me some comments and give me your opinion on that. If you want the 12 free stocks from Webull, you got to click on the link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands, guys. Keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.